Okay. I don't see our lights on, so well, we're just going to get started. So this says waiting for configuration on this thing. Okay.
I think it goes way long.
Yeah, it might just be waiting for Paul. Well, Paul's here.
Apparently they're still warming up.
Hey, Chuck.
As soon as I see a green light on our mics, we're going to get started. Okay. All right, we'll call our joint budget and finance and city council meeting to order. We have Brian Schmidt here from Schleiner Leonard to go through our audit presentation. Brian, I'll turn it over to you.
All right, thank you. All right, so I handed out some packets. The really large packet is the audited financial statements. There's also a smaller report to members of governance there. And then the packet that we're going to be focusing on is the presentation of the audited financial statements. That's basically a high-level overview of the other two. So taking that presentation packet, and it's also up on the screen here, we flip into the first page that says audit process and opinion up at the top. So for starters, just a quick refresher on what does an audit involve, what do we do during an audit, and what's the purpose of an audit. So really high level, an audit is us obtaining your financial data and records from throughout the past year and performing a number of procedures over that information, such as the items listed up on the screen. Various inquiries inside and outside of the city, a lot of analytics, detailed testing, whether it be through sampling, confirming items with the state or with the county or other third parties. And we perform all of these procedures for the purpose of expressing an opinion, and the opinion that we've expressed this year is an unmodified or a clean opinion. That's the same opinion we've expressed in the past. Basically, it means that in our opinion, we feel that your financial statements are accurate. Moving on to the next page here, just some other required communications. This is where if there was anything unusual that we noticed during the audit, or if we had difficulties during the audit of any sort, this is where we would tell you about it. But as you can see, the audit went very smoothly. Even with the remote approach we took this year, I think it went very well. Nothing unusual that we came across as far as strange accounting policies or procedures or transactions. The one item we always do like to point out down at the bottom are just a couple significant estimates. If you're looking through the financials and you run across the net pension liability or the net OPEB liability, just bear in mind that there's a lot of estimates that go into those numbers as far as actuarial inputs, so they can fluctuate a bit from year to year. As part of the audit, we also have to look at your controls and your internal processes, and we've got a few items to report here which are the same three you've seen in the past and very common across all the audits that we perform for cities your size. So the first one here relates to audit adjustments, and this is basically related to the fact that during the audit, there's certain year-end adjustments that we assist with. So many of your accounting balances and records are kept on the cash basis during the year, and then at the end of the year, we have to do this cash to accrual conversion to book some year-end balances. Now, there's actually quite a bit less entries that we record for your city than a lot of cities of a similar size, but there's still enough where we have to mention it in the reporting. The one in the middle here, this is by far the most common finding that we have related to internal controls. This is relating to a lack of segregation of duties. So basically what this is saying is that because of the size of your city and the number of staff that are involved with the accounting process, you're just not able to fully segregate all of the pieces of each accounting cycle to the extent that's considered ideal. So it's just something to be aware of. And finally, we have an item here related to financial statement preparation. This is just letting the readers know that we as a third party did prepare your financial statements. And whenever that's the case, the idea here is that there's maybe a heightened possibility that a disclosure might have been missing, or there might be some sort of undetected error. next page here, we look at our report on your compliance with Minnesota statutes. So the Office of the State Auditor gives us all these checklists and areas to review for compliance. All those areas are listed. I'm not going to walk through them. The one finding we had this year is actually the same finding we had last year, and it's the same situation as well. So basically, as a Minnesota city, you're required to obtain collateral to secure all of your accounts with your local banks. So this arrangement is usually something set up with the bank where the bank assigns securities to help collateralize your account. Well, what's happened this year and last year is that the bank performs a review on a monthly basis, and they assign just enough collateral to your account in order to cover your balance. Well, then if a deposit occurs the next day, now you're over the amount of collateral that's been assigned. So it's not much that's unsecured, but because there was a small balance that was unsecured, we did need to put it in the report. Okay, this next item here, this is new this year, and this is due to the larger amount of federal funding that you received in 2020. So when your federal expenditures exceed $750,000, we need to do this extra little mini audit, which is basically a federal compliance audit just related to those federal programs. So the two major programs that we tested this year as a result of this extra little audit is the Airport Improvement Program and then the Coronavirus Relief Fund for the dollars that came in through the CARES Act. So basically this audit consists of us reviewing the regulations that are in place, the requirements of each of those programs, making sure that you spend the money on appropriate areas, that the reporting was proper, etc. As you can see from everything listed here, we didn't have any compliance issues or findings. Everything was clean during this audit. And with that, we can finally get into the numbers a bit here. So we have the next few slides here that relate to just the general fund, because that's where the vast majority of the city's activity occurs. So just like in the past, we have a trend analysis. We have 2016 through 2020 here. This first slide is just really high level, looking at overall revenues versus expenditures. And then we have the fund balance in green there. So that's at the end of each year, what is that fund balance? 2020 budget is also on the far right-hand side. So just big picture, comparing 2020 to budgeted amounts. Revenues came in over the budget by about $266,000. Expenditures also exceeded the budget by about $445,000. And then there's that other sources that's in the bottom right-hand table down there. That's transfers out to other funds. So with all of that factored in, you had a decrease in your fund balance this year of about $266,000. Ended the year with a fund balance of $1,447,000. The next couple slides here take a look at the revenues on this slide and then expenditures on the next slide in just a little bit greater detail. So breaking out those lump sums into various categories here. So we have 2019, 2020, and then the 2020 budget here for revenues. Comparing 2020 to budgeted amounts, you can see that across the board in almost every category, you're really close to budget amounts. The one area where you do have that bigger gap, where actual exceeded budget by a fair amount, is under intergovernmental revenues. And that's where those CARES Act, Coronavirus Relief Fund dollars were coded. That's what's causing that difference there. We had about $200,000 come through between the state and other sources. Next slide here, same layout, but for the expenditure side of things. The two areas here that are exceeding budgeted amounts is general government on the left-hand side, and then the next one over is public safety. The largest items here that are causing these differences relate to COVID purchases with those CARES Act dollars, and then salary increases as well. Under public safety, that's mostly the police department for the excess over budget. Okay, next slide here, we take a look at that fund balance at the end of the year. This is looking at that unassigned portion of the fund balance as a percentage of your annual expenditures. So you can see that you've had a bit of a decrease this year between the decrease in fund balance that we talked about, and then also the fact that expenses increased from the prior year. So those two factors combined made this ratio drop off a little bit. So last year you had 80.8%, and this year you're down to about 57%, which is actually right in line with your target per your policy to maintain a ratio of between 55 and 60%. And just real quick, you just want to know what's happened with your cash over the past few years. Here we just have your cash balance at the end of each year. As expected, it's dropped off a little bit based on that decrease in fund balance. And on top of that, with the airport improvement project going on, that's a grant reimbursed project. So as you're incurring expenses, the airport improvement project actually that fund went into a bit of a deficit and borrowed from the general fund temporarily. That's what happens when a fund goes into a cash deficit. And that also contributed to this temporary decrease in the general fund cash balance. Okay, so that does it for the general fund. Moving on to the next page here, we have your two other significant or major governmental funds. So we have your debt service fund and your capital projects fund. Now in your accounting system and in the reports you maybe see from time to time, these consist of many multiple smaller funds, but in your financial statements, we lump them together into a more single aggregate presentation for debt service versus capital projects. Looking at the activity here, just high level, debt service fund is basically exactly what you would expect. You've got your revenues coming in from taxes and assessments, and then you've got transfers, that's that $270,000 coming in from other funds. And those items are being used to finance those expenditures, which is your debt service principal and interest payments. Overall, a slight increase there, about $46,000 increase from the prior year. Capital Projects Fund, the biggest items the biggest projects with activity in 2020 would be your 2019 street improvements project and your airport improvements project. Those two make up the majority of those expenditures of $1,772,000 that you see there. The revenues of $1.2 million, that's about $1 million of that is grants for the airport project. So overall, a decrease in that fund balance of about $327,000. And next page just shows the cash in each of those funds over the past few years. Capital Projects Fund, a bit of a spike in 2019 with the issuance of debt, and then this year working down, paying off, or paying down that debt proceeds and incurring those project expenditures, dropped it off a bit. And debt service, you've had some small but steady increases over the past several years. Okay, down to the proprietary funds. First one to look at here is the water fund. We're going to have, once again, a trend analysis, just like with the previous slides. Here we have your operating revenues in blue, operating expenses in red, and then the change in net position there. So that's not the actual net position, that's the change in net position each year. So as long as that's above zero, you've had an increase in net position each of the years shown here. So comparing 2019 to 2020, revenues increased about $66,000 from the prior year, mostly due to just charges for services. Expenditures, on the other hand, down about $77,000. You can see in 2019 there was a bit of a jump in those expenditures for some repairs, maintenance, professional services that were required. That dropped back off a little bit in 2020. And as a result, you had operating income in 2020 of about $150,000. Ended the year with an overall increase in your net position of about $146,000. Next page, we have the sewer fund, same layout. Revenues here for the sewer fund up about $151,000 from 2019 to 2020. Once again, mostly due to user charges and then also payments from AMPI. Expenditures, on the other hand, or expenses, very similar to the previous year, hasn't really moved much. So overall, you did have operating income in 2020 of about $196,000. And then we have some pretty significant non-operating items down there as well, if you look at that table at the bottom on the right-hand side. So the non-operating revenues that you see there of about 1.1 million, that's grant funding for your wastewater project. And then non-operating expenses, that's mostly just interest on your outstanding debt. Overall, because of that grant funding largely, you had an increase in your net position of about $1.1 million. All right, down to the last fund here. This is the liquor fund. So like we've seen with many municipal liquor stores throughout the state, quite the increase in the revenues from 2019 to 2020. Operating revenues, now this is net cost of, so it factors in your cost of your sales, up about $96,000 from 2019 to 2020. Operating expenses, that's up about $30,000. So with that, you had operating income in 2020 of about $95,000. So after factoring in non-operating items and a transfer to the general fund of $37,500, you had an increase in your net position of about $98,000. And just the cash in each of these funds once again. You can see that water and liquor both increased. Liquor is up about $90,000, water up about $232,000, and then sewer is down considerably because what happened here is in 2019 you had the bond proceeds come in and then you're spending them down in 2020. All right, we're in the home stretch here. So that does it for all of your funds. Now we've just got a couple slides here that look at government-wide. So this is taking all of the funds, wrapping all of the information together into an aggregate presentation, and then also putting it on the full accrual basis of accounting. So what that means is now we're going to be including things like capital assets, long-term debt, all of these long-term balances. So looking at this first slide here, we have assets, and then the next one will be liabilities. Big picture, just looking at 2020 compared to 2019, overall your assets increased. You can see the full length of the bar is increased compared to the prior year. The biggest fluctuation here, though, is just the composition of these assets. So in 2019, you had more cash on hand and more of these current assets. And then throughout the year with the projects that you've had ongoing, this cash has been converted into infrastructure and improvements, and that's why your capital assets bar here has grown. Liabilities, on the other hand, have actually decreased from 2019 to 2020. Biggest changes here, under current liabilities, you had some pretty significant contract or construction contract payables outstanding at the end of 2019, which didn't exist at the end of 2020. And then your payments on your long-term debt simply exceeded the amounts that you issued for new debt during 2020. That's why that red bar decreased. And on the right-hand side there in green, we have the net pension liability broken off. That hasn't changed a whole lot from the prior year. Just as a reminder, that's the city's proportionate share of the PARA statewide pension plan net pension liability. It's a number that's just assigned to you, and I break it out into a different color there because there's not much you can do about it. And last slide, this is just one more big picture look at the outstanding debt. And we have it broken out here between governmental funds versus business type funds. So governmental fund debt being the debt that's being financed primarily by property taxes and assessments versus business type funds debt, which is being financed by your utility revenues. So both of these are, there's the debt issuances in both of these categories extend through 2034 as far as final payoff dates. And that's everything I have. Any questions?
Good. Any questions for Ryan for me? Not seeing any. Thank you, sir.
Thank you.
All right. And with that, presentation, that concludes our special meeting. So we will adjourn and then regroup here around 5:45. Thank you.
There should be a sunrise
Just yell next time. It looks painful watching you walk over me. Just use the mic.
sunrise version. Shorter, it's like a 5 minute synopsis.